the first thing that we're going to talk about in the first lesson of this whole free day trading course is it's called getting a pulse on your market, right? Getting a pulse, getting a read. How do we trade what we know, what we feel comfortable with, and how do we get a feel for how that market moves? Okay, so and keep in mind as you watch these episodes and you work through this course, the very beginning stages of this course is going to lay some foundation. Okay, we're going to get into a lot of technical stuff later, a lot of psychology stuff. We're going to get into a lot of deep stuff in this course, but first I want to lay out the foundation. Okay, so we're going to lay out the foundation and talk about getting a pulse on your market. Okay, so with that said, I'm gonna switch screens here, and I'm just gonna dive into the iPad here, and we're just gonna talk about what that means. So what does it mean to get a pulse on the market, right? And excuse my handwriting, right? Excuse my handwriting. So what does that mean? Well, we want to trade like what we know, okay? What we know, okay? So here's the handwriting. I know it's horrible, right? We want to trade what we know. Like, what do you guys feel comfortable with? Like, to give you guys an example, right? I feel very comfortable with the tech sector. I understand tech, right? I understand how tech operates, how it works. I'm a very techie guy, but some people might not feel as comfortable with tech. Some people might feel more comfortable with like the value sector, or whether it's like the metals or gold, silver, platinum. You guys may know that better. Or say you may know oil and gas, the oil and gas sector, right? You may know that better, right? When you're trading, you want to know what market you're trading and understand it and have a deep rooted knowledge of what that industry is, okay? Because, and there's a reason behind that, because you want to understand what affects the market, okay? So what affects the market you are trading, okay? You want to know exactly what affects that market. For me, let's just talk about, I'm going to use myself as an example, but if you say you understand different industries, whether it be metals, gas, value, it could be whatever it is, right? Let's just use tech as an example. For me, I understand that big companies like Nvidia, Apple, Tesla, right? All of those companies, they influence the tech sector a lot. They have a big market cap. They have a big weight on the industry, okay? And in my specific industry that I know and understand, okay? So I want to be able to know that. I want to be able to understand what's going to drive those companies. And guys, keep in mind, like trading futures, and again, the concepts that I teach here can go very broad. They can go into stocks, options, whatever, okay? But for me, I'm gonna use futures as an example since I trade futures. For me, I know that I can't just pay attention to futures, okay? I can't just pay attention to the futures contracts. I need to know what is happening with the companies that are affecting the tech sector, right? Affecting the NASDAQ. Because if I don't know that, then I don't truly know what the sentiment of the NASDAQ is. I don't truly know or have a pulse on what the NASDAQ is doing, okay? So if I don't know that, then I'm actually trading very blindly, okay? So again, to tie all that in, you want to have deep rooted knowledge of what exactly drives the market that you're trading, okay? So again, for me, that would be tech. That would be the companies like Amazon, Meta, Apple, Tesla, right? Nvidia. I know that sentiment around those companies can affect me as a trader trading futures, since I trade the NASDAQ, right? If there's negative sentiment with all of those companies, likely then the NASDAQ may see a little bit of a pullback. But if we're on just absolute heaters like Nvidia and Tesla, we all report great earnings, or there's been some solid news with Nvidia with like investments for AI or Nvidia chips, right? There's solid news around that, as we've seen previously, then Nvidia tends to actually skyrocket, which in turn brings the NASDAQ up with it, okay? So again, that's what it means to get a pulse on the market, not just understanding or not just watching and seeing key levels and seeing what the market's doing, but why is it doing it, okay? Why is the market moving the way it's moving. Okay. Now, another thing I want to talk about here as far as getting pulse here, and I'm just going to draw another line, no line out here, right? And just, again, ignore my handwriting. My handwriting is absolutely horrible. I want to talk for a second about the amount of markets that you trade, okay? Ideally, you don't want to trade more than 1 or 2 markets, right? Because at that point, if you are trading multiple markets, do you really have a deep-rooted understanding, knowing what we talked about here, okay, over here? Do you really have a deep-rooted understanding of what's driving every single market, right? Or do you think you would be able to deep dive and have really strong knowledge if you just focused on 1 to 2 markets? Okay. So I'm going to erase all this here. Okay. We're going to erase all this here, and I'm going to give you guys a little bit of example here to back up kind of what I'm saying. Okay. If I can get all this erased here. All right. So let's just talk here, right? Let's talk for a second. Say that you're learning, right? Let's say you're learning a language. Okay. Let's say you're learning language, right? Over here, you're learning Spanish, right? And trust me, I'm going to tie all this in. Over here, you're learning Spanish. Over here, you're learning German, all right? Over here, you're learning French, okay? And then over here, you're wanting to learn, what would it be? Russian, right? Okay. Right. So think about this. How do you guys really think if you spent your time learning every single one of these languages, right? Every single one of these languages, if you spent your time doing that, would you be spreading yourself too thin? Or do you think you could effectively, right, in a good amount of time, in a decent time, learn every single one of those languages effectively at the same time, right? Probably not. At that point, you're probably spreading yourself too thin. Okay. So going back to that, let's just exit. Let's just erase all of that. Okay. Think of it like programming too. Say like programming languages. Okay. Programming. Ignore my handwriting. Right. Programming. Over here, you have C++. Over here, you have Python. Right. Over here, you have HTML. Over here, just say you have CSS, right? Say you're trying to learn every single one of these all at once. Are you really going to be effective? Probably not, right? Probably not. Oops, if I can get rid of this here. Okay, erase, 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 erase. Now, tying all that in, let's just say, right? Do you think you would be effective or trying to deep dive and learn and figure out how the market, every single market moves, trading NQ, right? Say NQ, right? Say YM or ES or GC, right? Or any other market, CL, right? Platinum, whatever the future ticker for platinum is. I'm just going to say platinum, right? Do you think that you could understand every single one of these markets all at once and not just know how they move, but understand what's driving them? Okay. What's driving these markets? Do you think you could sit down and get a deep rooted, I mean, as deep as you could possibly go, understand how every single one of these markets are moving? Probably not. You're probably going to miss something. You're probably going to miss like whatever is going to actually, the key factors are driving those markets. Okay. But what if you just focused on NQ, right? Or ES, or actually forget ES. Let's say gold and NQ, right? You only had those two to really worry about, right? On NQ, you know exactly what's driving those markets. You know whether it's whatever big tech company is driving the NQ. Or for gold, maybe it was rate statements, right? Maybe it was something economical that's making gold absolutely skyrocket, which we've been seeing in the past 2 months or whatever. It's been just absolutely ripping, right? If you only focus on 1 or 2, you are going to become more of a master at that particular market than you are trying to do everything else. Okay. I would say the progression line of somebody who is, let's just say, here, let's just do 2 lines here. Let's do 2 lines like this, right? Let's just say this is over here on the left is somebody who's learning 2 markets, right? Trading 2 markets. And over here on the right, somebody that's trading, say, 5 market, trying to trade and learn 5 markets. Okay. The person that's trading 2 markets, their progression line is probably going to look something like this, right? Kind of like a stock chart, right? But somebody that's trading 5 markets, they're really going to be kind of a slow grind up. Maybe they learn a little bit and then they just kind of, maybe they kind of fall off, right? They'll fall off a little bit and then they learn a little bit and then fall off, right? This is probably going to be your learning curve, right? For every single market, for the market and trading itself, right? When you focus on less markets and you try to become a master of those, your learning curve is going to be much steeper in an upward angle than it would be trying to learn and trade 5 markets. So to tie all this together, right? To tie all this together, you don't want to focus on several different markets at one time. Okay. You want to be able to sit down and take a look at NQ or gold, whatever your 2 markets are, whatever, even if you do 1 market, right? Say you don't even want to trade NQ, say you're just focused on gold and that's it, right? Learning what exactly is driving these markets in a deep rooted understanding. Okay. So like, for instance, for me today, I didn't really trade today. Okay. I didn't trade today because I knew that FOMC, the rate statement, and we had tech earnings as well. There was a lot of factors that affected me from trading. Now I have been trading gold a little bit, but my primary bread and butter is NQ. Okay. So with NQ today, I knew that we had earnings, big tech earnings, okay, like Meta, Google, things like that. We had FOMC, right? Rate statement. I'm just going to separate those two because we had Powell and rate statement. Generally, you can get sometimes you see the two don't even really correlate, though you'll get like one big move on rate statement. And then on FOMC, that's the complete opposite. Like when Powell comes out, it's a complete opposite move. So I know that we have all 3 of these things all on the same time. Why the hell would I trade that, right? Why would I want to trade during a day knowing that my bread and butter is NQ when we have a rate statement, we have Jerome Powell coming out, and we have tech earnings all in the same day, right? It's understanding that, which even this is very surface level, okay? Knowing this at a surface level, there is no way that I would want to trade this, right? There's no way I'd want to trade today because this is probably going to have some pretty wild PA, right? Pretty wild PA. And to be honest, I just want to stay out of it. Okay. So, but let's go a little deeper. Okay. Let's go a little deeper than that. So knowing that, and again, I'm just using myself as an example, and you take this concept, right, and apply it to yourself, whether you trade gold, oils, NQ, right? Whatever it is. But let's just say that again, NQ trader. Okay. NVIDIA, let's use NVIDIA as an example, okay? NVDA, because they hold a lot of market cap. They are a huge company. I believe, $1 trillion company, something not $1 trillion company. They have a massive market cap, and so they affect the NQ heavily, right? There's more to just saying, oh, NVIDIA is going out. And I know in chat, I hear a lot of people like comment and say, oh, NVIDIA is going up, NVIDIA is rallying, NVIDIA is pumping. Okay. Obviously, it's going to bring the NASDAQ with it, but why is it pumping, right? Why is NVIDIA moving the way it's moving? Okay. Here, there's a couple things we want to talk about. One, there is PE ratios, right? Some of you guys probably haven't ever heard of what PE ratio is. I'll encourage you to look it up. I'm not going to deep dive into a whole lot of like technical things in this video, so I would encourage you guys to look it up. But learning what their PE ratio is, right? What's the latest news on AI? Okay. What's the latest news on AI? Is that what's been driving the market, right? What about more investments into AI, right? That could be a factor that's driving the markets up. Or what about sales on their chips, right? Chip sales or chip deal, or even over here, I'll say chip deals, right? There is so much, PE can be a class on its own, it absolutely can. There is so much here that can affect NVIDIA. So having to understand every single bit of this, right? to get a deep rooted knowledge of why NVIDIA is moving the way it's moving, because likely when it moves, it is going to bring the NASDAQ with it. You have to know this sort of stuff, right? You have to know and understand what the biggest companies in your market are doing and sentiment, because that is going to give you an idea on where your market is going to go, especially if you're a futures trader, right? This goes far beyond just looking at, oh, well, the NASDAQ's going up here. We have support here. The daily bias is here. The daily high is there. Oops. The daily high is here. But then we come back down here. We have like last week's support line. Maybe we bounce off that and come down. Like, it's more than just that, right? It's more than just marking levels. There's more to trading than just looking at charts and candles and marking out key levels. It's understanding the deep-rooted knowledge of what's driving that particular market. Okay. Why is the market moving? Okay. And even going beyond like NVIDIA, right? Even going beyond NVIDIA, like Tesla, right? What's happening with Tesla? Okay. Or Apple. Apple is a great example, right? AAPL, just for the ticker, right? What are they doing with AI, right? What were their sales? Okay. What was their PE ratio, right? There's so much. I know you guys can't see that AAPL because of my camera, but you guys know what it is. In fact, here, I'll draw it down here. What's their deals with AI, or what's their sales there? That way you guys can see that. Perfect. Same with Tesla. What about their autonomous driving, right? How are they in the race of autonomy, right? It's all of those things, and understanding that and understanding the sentiment behind those companies. That's where you're going to find yourself becoming a very, very, very good trader, because you're going to understand at a deeper level what your market is doing. Okay. Hopefully all that is making sense. I'm not going to try to drag these video lessons out too far. And obviously I am doing this live currently. And so I'm going to get to some questions that you guys have, but it's doing this. It's doing the small stuff, right? If you think about it, like, you guys are, when you're trading, you are operating a business. It's understanding what the small stuff is, right? This may seem big, but understanding and studying these types of things is it's the small things, right? It's unsexy. It doesn't sound good. Nobody wants to do it, but it's doing this and understanding this is what's going to help you become a very, very good trader, because you're going to understand what? The pulse of your market. Every single market has a pulse, like it breathes. It's its own entity. It has a breath, right? And so you want to be able to understand every single bit of that. Okay. Hopefully that's making sense. And again, after this live, after we get through after this material here, I'll start answering some questions. But again, it's getting deeper, digging deep, understanding like what market moving, but then throwing rocks at it and understanding why it's moving the way it's moving. So again, taking this, just kind of repeating myself again real quick, because I want to touch on this. I think it's very, very important. Again, the person that focuses on 1 to 2 markets, right, versus the person that focuses on 5 to 6, even 3 to 4, right? Their progression is going to be very, very slow. But the person that focuses on 1 to 2 and gets a deep understanding of what's driving that market is going to see much, much more success. Okay. So again, find out what you're good at, right? What are you good at? What do you understand the most? Do you understand gold? Do you understand metal? Do you understand all of the metals, like silver, platinum? Do you understand gas and oil prices and what drives those, whether that be like war news, right? We all know like when we get war news in the world, that usually affects gas prices and oil prices, right? So having a deep understanding of that, what is going on with Russia, Ukraine, China, right? How can you take all the information that you can gather between all of that and figure out how gold or gas and oil is going to move, right? Taking for the gold example, taking the economy, what is happening with the economy? Why are people rushing into gold and buying up gold right now, right? Is there something happening that I'm not seeing as to why people are buying up gold? Is gold becoming a safe haven for investors? Is that what it is, right? There's so much that happens with every single industry. That's why you cannot possibly focus on several at one time, because you're not going to understand it. You're not going to have a deep rooted understanding and become a master of all markets when you, other than like versus like actually focusing on 1 to 2 markets and becoming a master. Okay. Getting a pulse on your industry is very, 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 very important. I hope you guys enjoyed this video. If you did, be sure to drop a like on the video, drop a comment, guys. Appreciate you. We'll see you guys in episode 2. Most traders don't have a discipline problem. I know this is going to sound, I know that sounds maybe like a hot take, but I will say, and maybe the newer traders do have a discipline problem, but they have a separate problem, right? Most traders don't necessarily have a discipline problem. It goes much, much deeper than discipline itself. There is a deeper layer beneath that not a lot of traders pay attention to. Okay. And what I mean by that is there is a, what do you call it? A psychological understanding of yourself, right? That's what I'm going to label it. A psychological understanding of yourself. And what I mean here is the people that struggle with, I'm going to say, just go ahead and say discipline, the cliche part of that, don't have a discipline problem. It is more of an identity issue, right? And what I mean here is, as an example, and we're going to dive into this here in a second. If you have a red day, right? Let's say you have a red day, and the discipline, in quotes, says to stop trading. It says to stop trading. It says to take the red day on the chin, to move on with your day, and to just not, don't keep trading to blow it out of proportion, right? That's what most people would say discipline is, right? You continue, you don't trade, you go ahead, protect your risk, protect your account, you walk away. That's discipline, right? But the people that come face to face with red days and they keep trading, a lot of times it isn't discipline that's a problem. It's an identity thing. You can't allow yourself to come face to face with a red day because you feel that it dictates who you are as a trader. You take it personal, right? You take a red day personal. And if you do have a red day, you start to kind of get down on yourself a little bit. You start to kind of question, are you a good trader, or are you supposed to be here? Are you meant for this? Should you be trading, right? Should you be trading? That's where majority of people have a problem. It's not the discipline. It's the identity part of it. It's, can you come face to face with a red day, right? And when you can do that, that's when discipline follows. Okay, because if you can't come face to face to a red day, that just means you're struggling with that mentality, that you're struggling with it personally. Like, oh no, like I just had a big red day, like my account's dwindling. I was so close to a payout, or I was so close to passing, and I gotta figure out a way to turn it back green, or at least get back to break even, to where I don't set myself back, or or make myself look like a bad trader. It's like you have to turn it back around to try to prove something to yourself, right? And that alone, again, and I'm gonna say it multiple times, is not a discipline issue. That is an identity issue. That is a identity crisis, right? In trading, right? So I'm going to give you guys a little bit example, and I'm going to show you what I mean here, right? So I'm going to switch to my tablet here, and walk you through what it is that I mean by this. Okay, and make sure my pen works here. Okay, perfect. All right, so let's walk through this. Let's just say, as an example, all right? As an example, you have a patience problem, big time. I mean, some people do. Some people do, right? So let's just say that, let's take a graphic designer, okay? Let's do that. Let's take a graphic designer as an example, okay? So we're gonna say this person is a graphic designer, okay? So this is not trading related. This is just kind of using this as an example, okay? Let's say they have a red day. Or sorry, let's say that they created a design, right? So they create a design, all right? So they create this design, and then they send the design to the client. Okay. So I'm going to zoom in here. So here we go. Here we're just talking about here. Graphic designer creates a design. They send that design to the client. Then the client comes back and says, you know what? This isn't what we are looking for. Right? How the graphic designer, right? How the graphic designer takes that statement, right, is very, very important, because now they're face to face with whether or not they are going to take this statement that the client just said personal and let it dictate how they feel about who they are as a graphic designer, right? So now the thoughts come through the graphic designer's head, right? And I'm gonna put the thoughts down here, right? So it's kind of like a loop, and it loops back to the graphic designer. And now they're thinking, right? Wait, now they're thinking, am I good enough? Right? Should I keep creating? Or should I shut the biz down? Right? So if you think about it, the graphic designer has a client, they send a design, client says, you know what? This is not for me. This is not what we're looking for. This isn't really matching our branding. This isn't really what we want, right? Now that feedback loops back to the graphic designer, and then they start questioning everything about who they are as a graphic designer, right? Am I good enough? Is my skill set up to par to where it should be? Should I shut it down, or should I take the feedback, face it, and get more feedback from the client and say, okay, what can I do to make this better fit your branding? Or what would you like to see changed to better the end result for what you were looking for, right? The latter, right? The latter of that. So we'll draw this out here, is what the graphic designer here should say. Say, okay, great. What would you like to see? I'll make it happen. Right? Wow, that was bad. Make it happen. Right? Excuse the handwriting, chat. I know I'm writing on with a pen and on an iPad. Okay. So this is what, now I'm gonna tie all this back into trading, right? This is where the graphic designer's headspace should be, right? This is where they should be. Okay. Again, just to reemphasize this, right? Or to go back over this, graphic designer takes a client, sends the design to the client. The client says, you know what, this is not what we're looking for. It's not really matching our branding, right? Then the graphic designer comes back and has choices. They say, should I keep creating? Am I good enough? Should I shut the biz down? Or should I take the feedback and be like, you know what? Okay, great. What would you like to see, right? Now, let's tie all of this back in to trading, right? Let's tie it all back. So I'm going to just draw this line down, right? Now, as a trader, okay, let's say here, you as a trader have a red day, okay? You have a red day. Now, you are in the graphic designer's shoes. The example that we just gave here, you are in that designer's shoes at this point, okay? This red day essentially is looping information back to you, right? So this red day is looping information back. And what you do with that information is very, very very critical of how you move forward. Okay, so let's just move this over here. So let's say now here's the feedback loop of having a red day. Okay, do I suck at trading? Right now, all these thoughts start coming into your head. Okay, right? Do I suck at trading? Am I good enough? Right? Am I good enough? Or let's just draw this, let's say out here, should I quit? And why do you think you are saying all these, right? Why do you think these thoughts come into your head, right? Or let's draw the big one out here. How do I, this is the big one. How do I get it all back, right? Excuse my handwriting. I know it's horrible, right? My handwriting is shit right now. Should I get it all back? Right? That's the big one. Okay. Why do you think that you, as a trader, after having a red day, why do you think you have all of these thoughts? Right? Why do you think those come into your head? The big part of this, right, of why you think about all of those thoughts there is not discipline, right? It's not discipline. It's because you don't know how to come face to face with a red day. So what do? Right? So what action, right? I'm going to just make a bubble here down here. What action do you take as a trader, right? You size up. You take tons of trades. You DCA. You reverse trades over and over. How many guys have done that, right? I bet that hit home for you. Reverse trades over and over. All right. See what else? Size up, take tons of trades, you DCA, you reverse trades over and over. And again, this could go, we could go even deeper on that. That's a big one. And then what else? All right. Size up, take tons of trades, you DCA, reverse trades over and over. At the end of it all, you full tilt and boom or bust. Right? You boom or bust. That's what you do. And you probably do all of them. Right? You probably do absolutely all of them. You'll size up, take tons of trades, you'll DCA, you'll reverse trades over and over, and then you say, F it, we're going to just full tilt this, we're going to go full size, we're going to YOLO this, and we boom or bust. We either get it back or we're resetting or we're losing our funded, right? That's essentially what it is, okay? So when you can't, now again, that's the actions that happen when you cannot come face to face with a red day, which is what? An identity issue, which is what happens when you have an identity issue and you can't come face to face with a red day. You take the actions that go completely against discipline, right? You see where I'm going with this? You take actions when you can't come face to face with a red day because you struggle with it personally. You take actions that go completely against the grain on discipline. Let's reverse it, right? Let's reverse this. Let's say let's do this. Let's draw. Let me delete this line again. Let me draw another bubble here for action. Okay. So this one is going to be, what if you could come face to face with a red day? Okay. Again, you're going to see why it goes much deeper than discipline, why most traders don't struggle with discipline. They struggle with something completely different, right? Identity. You're going to see it here. Action, right? Say you can come face to face with a red day. What do? You walk away. Again, some of the cliches. You review what went wrong. Right? You don't stress. Because why? Because tomorrow is a different day, right? So you're not stressing because tomorrow is a different day and you're going to be able to possibly have a green day that gets back the red day that you just had, right? What does all this entail, right? Because you're able to bring yourself to come face to face with a red day and be cool with it, what actions do you take by doing that, right? This is the disciplined side of a trader. My handwriting's so bad. That's a disciplined side of a trader. But why were you disciplined? What caused you to be disciplined. You being able to come back to a red day, you being able to face a red day, right? Identity. You being able to sit and look at the red day face to face and be like, you know what? I was wrong. Okay. This doesn't dictate me, right? This red day right here, again, that red day doesn't dictate who you are. Wow, this is bad. Hang on. Who you are as a trader, right? When you can stop letting red days really just eat at you personally, that's when discipline follows, because you just don't care. You don't care about one single red day, because you know that tomorrow's a new day, next week's a new week, next month's a new month, right? One single red day doesn't, and that's another thing too, right? That's another thing. I'm gonna actually draw another line here. The red day doesn't dictate your whole week or month, right? Getting there is probably the single most important thing for a trader, is understanding that that one single day isn't going to dictate your whole week or month unless you let it, right? And if you do let it, that's where the identity issue comes in, right? Because you are taking it personal. You are taking it to heart. You're taking it in a very negative way, which forces you to then what? Going back up here on these actions right here. Size up, take tons of trades, you DCA, right? You reverse trades over and over, you full tilt or boom or bust. And y'all know what DCA is. Y'all trust me. I know what y'all be doing with DCA. I did the same thing, right? Just as an example, when y'all are in that moment, right? I'm just gonna draw a chart here. Okay. Oh wow, that was turned into a straight line. Okay. Actually, you know what? Let's do it on a downtrend here. Right. Oh, accumulating, up, drop, boom, boom, accumulating again, up, drop. Okay, here we go. Let's just say here, you're like, you know what? You're on a red day. So you take the long, right? You take, oh, dang it. How do I undo that? There we go. You take the long right there, right? You're trying to get your red day back. You're like, oh, good. Look what's happening. It's riding up. It's coming up here, right? We're on this uptrend right here. And then bang, straight back down. You're like, okay, well, you know what? We came back above my entry and now we're coming right back down. Great. Okay. Oh, look, here we're accumulating, right? So let's go ahead and add. Let's add there. We're accumulating. This looks like it's a bottom. Tank. Uh-oh. Now we're making a red day worse. We're full tilting at this point. We're not happy. What do? Oh, look, another accumulation phase. Looks like this is the actual bottom. So here, boom, we add again. Now our average entry price is like somewhere down in here, right? So we'll just call it that. Our average entry price, somewhere down in there. Oh, you know what? We're accumulating, we're add here. Our average price is now lower. All we need is a little bitty pop to get us back green, right? Just that one little pop. What happens? Account blown, right? Account blown. This action that you're taking, again, referring back to the actions here, right? That is the action that you're taking essentially through all of this, right? Because why? Because you cannot face the fact that you are going to be red. And what happens? Discipline goes out the window. A lot of people, so many people, again, guys, this whole like day trading course thing, this is to teach you how to think, right? Trust me, I could do technicals on a chart. I could draw a line and say, oh, you should buy here, sell here. I could draw lines. No, everybody does that. This is to teach you how to think, because nobody is teaching you this. They go so surface level on saying, oh, bro, you're just not disciplined enough. right? You're not disciplined enough to get up and walk away, but it's so much deeper than that. It's so much deeper. It's the fact that you cannot accept it. If you can't accept it, you can't be disciplined. If you can't bring yourself to being okay with facing a red day, then you can't bring yourself to being disciplined. You have to bring yourself to say, you know what? This doesn't dictate who I am as a trader. Again, going back to the graphic designer, all right? Going back to our graphic designer example, when he sends the design to the client says, what? This is not what we're looking for. And now he's faced with all these decisions, right? Should I shut down the bids? Am I good enough? Should I keep creating? Or should I say, okay, great. What would you like to see? And I'll make it happen, right? And in this scenario, when you do take the red day, right? When you do take the red day, what do? When you have got yourself in a situation where you fixed your identity as a trader, you're at a good point. You say, you know what? Okay. You review what went wrong. How can I make it better? What did I do wrong that forced me to have a red day? Did I actually follow my plan? That's another thing too. Did you actually follow, did your trades follow the exact structure that you normally do, right? If not, then you know why you had a red day. If you still followed it and you still had a red day, the market was still going against you and you were still just wrong. It's okay to be wrong, even if you follow your plan, right? It doesn't mean your plan's busted. It just means today you were wrong, right? And so those actions, when you get there, you're able to then what? Walk away, review what went wrong. You don't stress about it, and you come back tomorrow and you say what? Tomorrow is another day, right? Next week is another week. Next month is another month. One red day doesn't dictate who you are as a trader. This is something I'm very, very passionate about because, again, there's so much online that just says discipline, discipline, discipline. Bro, you got to be disciplined. If you're not disciplined in your life, you're not going to be disciplined in trading, which can be true to some extent. But at the end of it all, it all boils down to one simple thing. And that is because it is an identity issue. You struggle with it yourself, not the fact that, it's you're wrong and you can't make it back. It's the fact that you take it personal, right? It's not that you're a bad trader. It's not that you're not cut out for this. It's the fact that you can't face it, right? You can't face it. But when you fix that part about you as a trader, that is where the discipline follows, right? So again, next time you hear somebody talk about discipline, go a little bit deeper, right? What causes somebody to be disciplined? While it may be habits, 9 times out of 10, guys, it's going to be a lot deeper than just habits. It's going to be identity and who you are as a person, being able to face those red days, right? So again, I would encourage you guys to really rewatch this and to really sleep on this at night, because again, this is something that is big. It's very big, and it just applying and thinking about these concepts and figuring out how to get to here, right? On the good actions that you take, that is where you're going to have the turning point in your trading. The biggest turning point in your trading is going to happen there, right? Not over here, not over here on the bad actions. The when you're not clear on who you are as a trader and being able to face those red days, your identity part, right? Not here. Your success does not lie here. Okay. This is a bust. While it may work short term, and it could work short term, long term, you're going to absolutely flop. Okay. This, when you are able, again, to come face to face with that, the red day, the discipline then follows. Oops. That is where you're going to find your success. Okay. So let me know in the comments, like, what did you guys find that valuable? Did y'all get a ton of value? I know this is a little bit shorter one, but did y'all get like an absolute, did y'all get a ton of value there? Let me know, because I want to keep doing these. I want to keep doing these live, but I want to make sure that you guys are getting tons of value out of this, right? Let me know in the comments. Give me a thumbs up. Give me something down there. Let me know what you guys think to see if you guys are getting tons of value here. everybody as humans, right? All of us as humans, human nature, if you take the whole human nature side of things, right? All of us as humans, we all have a certain biology to us that changes over a period of time throughout the day, right? Your biology changes, everything from your mental focus to your body's energy. Everything changes over each period of time throughout the day, okay? And if you put that into a trader's perspective, right? I see a lot of traders, they trade every single session. And a lot of you guys are probably, this probably might hit home for you because you're probably guilty of this. And trust me, I've done it too. But if it works for you, it works for you. A lot of traders will sit around and they'll trade the London session, then they'll trade the New York session, and then they'll trade the Asia session till late at night, and then get up early in the morning and trade the London session again, and then the New York session, and then the Asia session again. And it's like this repeated cycle, okay? But the issue with that is referencing your mental focus and your biology and your mental biology, it changes over a period of time and your mental focus, right? So I'm going to give you guys an example of what I think has been probably one of the biggest changes in my trading. Like one of the biggest changes that I made helped my trading tremendously. Okay. So I'm just going to jump in here, right, on my iPad, and I'm going to give you a little example. And again, we're going to tie all of this back into trading, right? But whether it's trading or whether it's anything else, you should always do the most important task, right, when your biology is at its peak. Okay. So if you think about your body's energy or your mental focus energy, you should always do the most important and tedious task when you're at peak of your biology at whatever time frame that is. And that's different for everybody. Okay. So as an example, let's just take somebody who works out, right? So let's do like 8 a.m. or actually let's go even further. Let's go like 8 a.m. And again, I'm going to tie all this back into trading chat. So just give me a second. Let me work through it and you'll see what I'm talking about. Okay. So let's do 5 a.m. All right. And let's do 8 a.m. and then we'll do noon and then we'll do early afternoon. All right. And then we'll do like 6 evening time. Okay. And then we do like 8 p.m. Right. If you look at somebody who works out, okay, just as an example, as somebody who's in fitness and works out, they have a prime time that their body is like, you know what, this is the peak time for me to go do this. Some people, that could be 5 a.m., okay? Or for some people, that could be midday, right? That could be midday. Or some people, it could be 6 p.m. or it could be 8 p.m., right? Each individual person that works out has their own time frame that works absolutely best for them and their energy. Okay. For me, it's usually around noon, right? Midday, when I've knocked out, everything that I need to knock out. And the most, I would say, energy spending task, I want to knock out before I get to mid evening, because I know that's when my mental and body energy usually starts to crash, right? It's an awareness thing. Okay. It's an awareness. I know for me personally that here in this time frame that I usually start to crash. All right. So now tying that, let me just erase all this. Actually, you know what? We can leave that. We can leave that and we'll go down here. So tying this into trading, right? I'm just going to write this. How does that tie into trading? It's the same exact thing, right? You have London, you have New York, and you have Asia, right? You have the three sessions that people mostly trade, right? And some of them, again, do all of them, right? But if you think about it for a second, what if you only focused on one single time frame that you know that your mental capacity, your mental focus was at its entire peak, right? What if it was at its peak and you only focused on that time frame? Let's just say that you as a trader know that you perform best. And again, this is all tying back into how you perform, like what time do you perform the best? Okay. Let's just say for you, you perform well during the New York session, right? during the New York, but at open. Okay. I'm Central Time, so I'm putting 8:30 a.m. All right. Obviously, do the time difference for wherever you are. But say like you perform best in the mornings. You're up, like you're awake. You've done your morning routine, whatever it is. You perform best at that time. But during Asia, right? But during Asia, you know that mentally your focus starts to drop. Maybe because you've already gone through an entire day. You've already had a long day of work. Kids drove you crazy. Your spouse drove you crazy. Maybe you got in a fist fight with them. Don't encourage domestic violence. Maybe whatever, right? Maybe your focus is just gone at that time, right? And do you think that with your focus already deteriorated, right? Your mental biology, your mental energy has already deteriorated. Do you think you would actually perform at your best, right? Do you think you would actually have the mental bandwidth? Take the trade that if you watch the live stream, take the trade that I took during the live stream today, right? On Friday, what's the date? Friday the 7th? Because people will watch this video probably later on. So Friday the 7th, if you watch that live stream, you saw me take the trade that I took today. Would you have the patience to sit through that if you were in Asia session, your focus was already deteriorated, right? Think about it for a second. So tying all this, and maybe even going to London, right? Let's just say that you are more awake and alert and your mental biology and capacity is at its peak during London, okay? So say you're at peak, right? Here, New York, let's just say you're still, I'm still going to draw this down. Say you're at peak. London to say like New York morning session, right? And I'm going to take Asia and I'm going to draw it down here for a second because we do have the open and we have power hour. Okay. For me personally, I can tell you this, right? And I'm just going to use myself as an example too. I perform better at the open. Okay. That's my peak, right? I'm at peak during the market open because I'm alert. I have my first initial tedious task, which is trading, takes the most out of me, is going to be right there at the beginning of my day. So I'm at my peak. Whereas if I already had one hell of a day, right? If I've already had one crazy day full of things, and I know that I'm usually not at my peak during power hour, and I just went through all of this, does it make sense for me to really trade power hour? No, it doesn't. It makes zero sense because I'm probably going to make worse decisions and I'm probably not going to have the focus, the mental capacity to sit through, trade, and be patient. I'm probably going to have bad habits, right? Knowing that about yourself, having that awareness of when you perform at your absolute best is going to help your trading. And so many people look over just this one part of trading, dude. They really do. So many people look over this. And it's probably the most important. Because how many times, chat, and lock in with me for a second, how many times have you had a bad day? Say you got into an argument with your spouse or somebody broke up with you, or you had just had a bad day in general, and you came to the charts and traded and you made bad decisions and lost money, right? Think about that for a second. You were at the charts, you were already tilted on the day, and it forced you to make bad decisions, right? I guarantee you, most of you, if not all of you, have been there. I personally have been there, right? So I would not want to do that. I wouldn't want to be in that moment, right? I wouldn't want to have a horrible mentality and then come to the charts and trade. You know what I mean? So I am going to choose the absolute most peak time that I know I perform the absolute best at, right? For me, that is New York Open. Oops, get rid of this. That is New York Open, right? That's my peak. Anything into here, sure, I might be here trading and streaming with you guys and watching the charts. And maybe I do take a trade, which you guys saw me do today. But you guys know and can tell if you watch my morning streams versus my afternoon streams, I'm usually not as active in the afternoon with trades. I'm usually more active in the mornings, right? Because I know that's my peak. But the whole point behind this is, again, looking at the fitness example, right? For somebody that works out, if they go to the gym at 12 p.m., right? If they go to the gym at 12 p.m., but their energy is more here at 5 a.m. to 6 a.m., do you think they're going to be go full out on their workout, or are they going to half-ass it? Or are they going to maybe take it a little bit lighter, or is it going to be a little bit rougher for them to get through it? Right? Chances are, if their peak is at 5 a.m. to 7 or 5 a.m. to 6 a.m. or whatever, and they go to the gym at noon, they're not mentally going to be fully with it. Right? They're probably going to half-ass it. They're probably going to, skip on some things, or maybe do less reps, or maybe not do a quality rep that they should be doing. Right? Chances are that's going to happen. The same thing, dude. The same thing applies to trading, right? The same thing applies to trading. If your peak is in the mornings, you are not going to be performing at your best during Asia, right? Or during power hour. Okay. So again, to tie all this together, I would encourage you to stop trading every single time frame and only trade when you're at your absolute peak. Again, as humans, our biology changes throughout the entire day, right? It changes. Okay. Just to give you an example, guys and their testosterone is usually higher in the mornings, and it drops throughout through the day. It's a natural thing, right? That's your biology. Your biology changes through the entire day. And so you have to have the mental awareness of when you should be performing your absolute most tedious task or most important task, because that is when you should be in the trenches doing those tasks, whether it's trading, whether it's fitness, whatever, right? That's when you should be in the trenches. It's in the most important time, or the best time, when you are at your peak with your biology. Does that make sense? Right? Hopefully that makes sense to you guys. So again, keeping this lesson short, because I'm not going to drag this out. I'm going to keep this video pretty short. The whole point of this is to stop feeling like you have to trade every single session, because your mental capacity is not there for it. It isn't. As humans, we're not there. Like you can't possibly be 100% focused during London, New York, and Asia. It's impossible, right? Your biology doesn't allow for it. All right. You would actually be superhuman. Okay. Because your biology changes, you're not going to be able to perform at your best during all sessions. So the encouragement here, pick 2 time frames, pick 2 sessions where you feel like you're at your absolute peak. If you want to trade more than one session, pick 2, right? Pick 2 where you are at your absolute peak. Okay. And then trade those. That's what I would say, right? That's what I would say, because again, you want to be at your absolute best. You don't want to be, at 50% when you need to be at 100 because you're actually making money. Like, money is on the line. Do you really want to be at 50% when you're trying to make money? No, absolutely not. Right? Absolutely not. And Stephanie, you brought up a good point. I'm gonna address that too. My peak is on a different schedule than my strategy. Well, here's the thing. There are some exceptions to that, because obviously, like, work schedules and maybe family activities or whatever it may be, they are tying up your schedule. But there are ways to train your biology. Believe it or not, there are ways to train it, right? So if that's something that you have to do to train yourself for certain periods of times of the day, then you have to do that. It's like a sleep schedule, right? If you think about it for a second, like, there's ways to train your sleep schedule. Okay. And your sleep schedule affects your overall biology. You can train yourself to perform best at certain times of the day. Okay. You can. It's a hard thing to do, but it's possible. All right. It's something that I had to do. I'm actually a perfect example of that. Generally, for me personally, usually I'm at my peak at night, right? Or I used to be at my peak at night. I used to be a night owl. Now I go to bed at like 10:30. Okay. I used to be at my peak at night, and I had to really train myself to, have a good go to bed when I need to go to bed, and then have the rest and the things that I needed to get up in the mornings and perform my best. Right. So you can train yourself to perform at certain hours or certain times of the day. You just got to train yourself, but it's a hard thing to do, but it's possible. right? So anyways, that's my encouragement, guys. That's the video. This is the third video of the day trading series. Again, we are going through the mental part of things. We are going to go through the technical side of things as well. But hopefully you guys got value out of this. If you did, just as a closure here, be sure to hit the like button, subscribe to the channel. All right, because we are doing more of these, fam, and we'll see you guys in the next video. All right, jumping in here, we are going to talk about how you can turn 2026 into the year of you getting payouts. And it all revolves around this one concept. A lot of people talk about New Year's resolutions. They're going to do X, Y, Z in the new year. They're going to be this, they're going to be that. But really, what people I think should be focusing on is what their final form is going to be in the next 5 to 10 years, okay? If you have that longer term vision and you start building the habits that mold that person, you're more likely to see larger success in 2026 because you are building on the habits that mold that person, okay? And so I know, just bear with me, we're gonna tie all this together here. But instead of, again, saying, oh, my New Year's resolution in 2026 is to have better habits in trading or to not overtrade, to get more payouts, this and that. Instead of that, think about you as a person, you as an individual in the next 5 years as a trader. Say, you are a 6-figure trader. This is how you act. This is how you treat trading. This is how you think about trading, right? And then take that concept, take that idea and build the habits around being that person, okay? And the best way for you to do that is to write out what your struggles are as a trader. So let's just say that one of the struggles that you have is over trading, right? So let's just say that over trading, excuse my handwriting, I'm writing on an iPad, it's horrible. Say that's one of your struggles, okay? So we'll write up here struggle number 1, right? Just say that's one of your struggles, okay? And then again, take this struggle here and write out a list, come up with solutions, right? So what are the solutions that we could build and habits that we could build around this one specific problem that we have? Okay. And again, guys, if you do this, this is going to help you get more payouts in 2026. I can almost guarantee that you're going to find yourself becoming a better trader. And also these concepts apply in everyday life too, not just trading. Trading in everyday life, they correlate pretty closely. Okay. And so if you take this concept, I promise you're going to find yourself in a better spot trading and mentally, and you're going to get more payouts. Okay. So take this, your struggle number 1, right? And that's over trading. Okay. Build habits. So write out like bullet points here, right? So what are some bullet points that we can write out that help us with this? Okay, well, we need to create actions, right? Creating actions that distract us from trading. That could be hobbies, right? That could be hobbies. That could be going outside and going for a jog, right? Or doing something with friends, right? Taking our mind off trading and making trading the last thing that we're thinking about, okay? Because we're trying to stop and prevent ourselves from over trading. When we start over trading, our brain is going into overdrive. It's saying, hey, we need to get back this red day, or hey, we need to make more money. Your brain is constantly ticking and constantly trying to figure out what the next best trade idea is, right? And we want to avoid that. And so the best way to avoid that is to figure out, okay, well, for me anyways, and it might be different for you. Again, I'm just using it as an example for what I do. I'm building habits. A habit that I might do is just distract it, right? Go out and do something, find a hobby, do an activity that distracts my mind from thinking about trading, right? The next thing here is make trading like not very easy to access, right? Less accessible, right? Again, I know my handwriting's horrible, just bear with me, but make trading less accessible. Okay. So it's like where you shut down your computers, shut down your monitors, lock everything out, right? Make trading difficult for you to access, or make it a process for you to come back, have to turn on the computer, turn on your monitors, load up all the charts, log in, this and that, right? Make it a problem towards like, I don't want to have to go to my desk, come do all this stuff and log in and then take trades, right? Make it less accessible, okay? Because that's going to make you want to trade less, okay? So, but again, this is just examples. I'm not saying do exactly this. I'm just giving you an example of what you could do and actions you could create to solve certain problems, okay? And now it's something you could do. It's on more on the positive side of things. Is create a reward system, right? You could create a reward system where if you do follow your rules every day, what is something you could give to yourself every day for rewarding you for following those rules, right? Create a system that trains your brain to think, if I do X, then I'm going to get Y, right? It's all about creating actions, creating habits, right? So let's just move on to another example here. So overtrading was one, right? Let's just say that one of your struggles is getting more payouts. So struggle number 2, right? Actually here, let's delete that. Struggle number 2, getting payouts. And I'm just gonna do a dollar sign for that, okay? So now, okay, one of our struggles that we had in 2025, just as an example, is we didn't get as many payouts as we wanted to, okay? So what can we do? What actions can we take that help us get to more and more payouts, okay? And one of those could be not going for home run trades, right? I'm just gonna draw an arrow for going, home run trades, okay? Just don't even just ignore my handwriting, chat. Okay, not going for home run trades, right? Maybe in 2025 you were going for these massive trades, and like you would get into profit, and they would come back to your break even, or then it would turn red on you, right? Maybe create a habit and an action to where you're taking shorter trades and just building that profit up, building that buffer in your account to help you get to those payouts. Again, I'm not trying to narrow in on anything specific for you guys. I'm just giving you examples. This is a broad example of what you could do to help solve these problems, okay? Again, it's all about writing out your struggles and coming up with solutions to those to then act on and build the habits to create you and turn you into the trader that you want to be, okay? Now, let's say another example is that you're losing accounts too quickly, okay? So the struggle of getting payouts, you're losing accounts too quickly. Well, what can you do to prevent yourself from losing those accounts? Well, you could size down, right? So we're going to focus on sizing down to build a buffer in these accounts before we size up. Okay, this is an actionable step that you could take to prevent you from losing the account. So we're going to start by sizing down, build up that buffer. When we feel comfortable and have some money in the account, then we can start sizing up and building the account into a much larger balance. Okay, so that's another example, right? Let's just say that you're in struggle number 3. Let's just say that you struggle facing a red day. Okay, so struggle number 3. Oops, delete that. Okay, struggle number 3 is facing a red day. Okay, so this is one of the big struggles that you have. Okay, so what can we do to help us face this red day? Well, we know that if we loop back to struggle number 1, we were trying to distract our brain using hobbies and other things from thinking about over trading. Well, the exact same concept could apply here. You could distract yourself, distract your brain from thinking about it, right? What are some actionable steps that we can take? What are some hobbies, some events or things we could do that takes our mind off thinking about this red day? A lot of people resort, and something I want to talk about here on this red day, first off, a lot of people resort to facing a red day and struggling with it as a discipline issue. And really it goes much deeper than that. I've talked about this in a previous video. You can go back on my channel and listen to this, but it goes much deeper than just discipline. Most people can't face red days because it's an identity issue. It's not a discipline issue, it's an identity issue. You have trouble with yourself and getting to yourself to a point of facing a red day. That is more of the issue than just discipline itself. It really goes much deeper than that. But for this example here, you could distract yourself. Don't think on it too much. Get yourself away and what's something fun, energetic, or uplifting that you could think about that distracts your brain from the negativity of having a red day. Okay. Again, creating an actionable step that you can take. All of this, I know all of this is, it sounds like it's easy to do, but all this is actually really hard to do. Some people will do this, but then still find problems and issues on following these habits that they create. But so you do have to have the willpower, so to speak, to implement these and follow these in your trading, because it's not an easy thing to do at all. Not an easy thing to do. But again, just to tie all of this together here, the biggest thing that we want to do is create actions and habits, right, that mold the person we want to be in 5 to 10 years. That's what we want to do right here. This is the biggest thing that you could do for yourself in everyday life and also in your trading. What trader do you want to be in 5 to 10 years? Okay, great. What habits, what are we struggling with right now that is preventing us from being this specific trader in 5 to 10 years? Okay, great. We made it a list, right? We got our list here. These are the things we struggle with. Okay, cool. Now let's put a column under each of these and write out habits and actions that we can create under these struggles that we can implement for 2026 and see what kind of trader that we're going to be by the end of the year and even in those 5 to 10 years. Okay. Again, the long-term vision is 5 to 10 years, but if you start focusing on habits that fix your struggles and problems, you're going to find that you excel much faster. And that 2026, you might be seeing yourself getting more payouts, holding accounts for longer, right? Making more money, being a better trader and feeling good about yourself, right? Again, because you're following and creating solutions to problems that you have. The biggest thing that you could remember that you can, think about and remind yourself is that even the smallest habits compound into a final product. Right? When you have the smallest habits and they continue to compound, they create a final product, right? That final product is you in 5 to 10 years. You take these habits, right? You compound them over a year, 2 years, 3 years, 5 years. The final product is going to be far different than where you are right now. And you're going to be much happier and probably much more successful in your trading or whatever it is in your everyday life that you want to achieve. So I hope you guys like this kind of content. Again, this is something that I feel very strongly and passionate about. And I really wanted to lay this out for you guys because this is something that not a lot of people talk about. And I really wanted to bring this out and help you guys because this is something that I am working on myself. Like I have a long-term vision of who I want to be in 5 to 10 years. I actually have it on the background of my home screen of my phone, like who is Joey Morgan? And it has a list of things that I am in 5 to 10 years. Okay. And so now at this point in my life, I'm creating actionable steps that to help mold that person that I want to be, right? And so I would encourage you guys to do this. Take some time like this weekend before we get into the new year, right? Or well, the new year is Friday, but take some time this weekend before next week and really think about the habits and actions you want to take. They're going to help mold you into the trader or person that you want to be. Now, again, like I said, I'm going to share my screen here. Like I said, we want to give ourselves as much opportunity to come out positive on the day as we can. We don't want to limit ourselves to, losing one trade, 2 trades, and then being blown out, or we blow the account, hit the daily loss limit, whatever it may be. We want to give ourselves opportunity, right? The more opportunity we have, the more we increase our odds of coming out green on the day. Now, I want to also say that this does not mean go over trade, right? It's not what that means. Don't go over trading thinking, because I'm giving myself multiple opportunities to come out green doesn't mean I need to go slam 10 different trades, right? Don't do that. That's not what we want to do here. We want to make sure that we give ourselves opportunity while taking good trades and not over trading. So with that said, I'm going to use my personal account as an example here. My personal account, again, I'm using numbers based around my account balance, right? So you could use your own personal account for this if you have one, or you can use it in terms of prop firms. Prop firms, obviously, you're a little bit over leveraged with the amount of drawdown that you have, but you can at least kind of tailor this to your prop firm account, right? So I'm going to use my personal account as an example because I do trade it the most. Now, my account balance on my personal account is 60,000, right? It's about 60,000. A little bit less, but we're gonna round up to 60. Okay. Now my personal account is $60,000. I don't like to risk more than 2%, right? My risk management in my personal account is usually 2% per day. All right. And that equates to about 1,200. Right. So my daily risk is about $1,200, right? If I'm going to risk 2% of $60,000, right? And so again, I want to make sure, what's going on here? I want to make sure that I give myself the most opportunity possible. Okay. So with that said, what can I do to give myself the most opportunity per day? Okay. So I'm going to use the example as a mini, right? So if I use one mini, okay, and in current trading conditions, we've had a lot of volatility. I have to have wider stops to give myself opportunity, right? So we're talking about 25, 30 point stops to even, have a chance at winning a trade because of the amount of volatility that we're getting. We're getting massive candles. So a 20-point stop can get run just like that in the current environment, right? So with that said, 25, 30-point stops, at minimum. Okay. So, I mean, if I have a 30-point stop, okay, that's a $600 loss. Okay. That only gives me 2 trades before I hit my $1,200, right? From my 2%. I don't want to be in that scenario. I want to make sure that I give myself a lot of room, right? And so even if I scale this down to 5 micros, okay, that's going to be now, again, 30-point stop. That's just going to be half of that. So it's going to be about 300, right? $300. And now I have 4 trades that I can lose. What do you think gives me the most opportunity to make money? This one or this one? Right? Knowing that I only have 2 trades that with 30-point stops that is going to make me lose $600. I only have 2 trades before I tap out my $1,200 on the day. Whereas 5 micros, I have 4 trades that I could take before it taps me out on my $1,200, right? And then obviously you can scale it down and go to 3 micros and so on and so on. But again, it makes more sense for me to trade 5 micros because I'm giving myself 4 different chances to make money, right? Whereas I may lose, right? I may lose the first trade. Okay. 5 micros. I might lose the first trade. I might even lose the second one, right? So I might even lose the second one. Okay. And so now I'm down 600. Okay. Half of what my daily loss is. Now on the third trade, obviously, I want my winners to be bigger than my losers. That's generally how I trade. My next trade, I might make, say, 450, right? I might make 450. Now I'm only down, was that 150? Now I'm only down 150. And just say that I actually won my 4th one. If I did take a 4th trade, again, I'm not condoning over trading. I'm just saying I'm using this as an example. But even if I win my next one, right? Let's just say I win my next one and it's 300, right? What I lost on one of my other ones. Now I'm up 150, right? So you can see, like, you don't want to limit, you don't want to put so much constraint on yourself to perform well, again, because when you have constraints, you have pressure, you have all of these limits, right? Like 2 trades before you hit your daily loss, chances are, especially in this environment, you are going to hit that daily loss limit, right? And especially in this environment. So again, you want to be able to size down, give yourself the most opportunity. Okay. And even then, let's just say again, you're trading 5 micros. Let's do another example here. Just say you're trading 5 micros. All right. Excuse my handwriting. I'm writing on an iPad. It's not perfect. I know. Get off me, chat. Say you're trading 5 micros. You lose the first trade. Okay. Now you're down 300. Then you win 450. Then you win, say, 500, right? Now you're only 3 trades, okay? So look at the amount of pressure that you would have. Say here, you lost your first trade. You're not really feeling pressure here because you're down only 300. Your daily loss is 1,200, right? In my example, okay? Now, again, use this system and redo the numbers for whatever you have. But in this example, for my account, I'm not feeling any pressure losing my first trade because I'm down 300. My max daily loss is 1,200, right? So I'm feeling no pressure here. I can be patient and I can wait and take really good setups next, take 2 more trades, and bang, I'm up on the day. What was that? I'm up 150. So $650 right there off 3 trades, right? And I didn't even use all 4 there. Okay. So you see, like, obviously, like I'm just throwing out numbers and giving examples here, but the overall point here is to say, don't position size yourself to where you are very limited on what you are available to do, right? And so, because again, you might take 2 trades in the morning, right? You might take, right, in the morning, you might take 2 trades, but then you get to the afternoon, and let's just say I hit my daily loss limit here, right? And then you might get to the afternoon here, and there might be an A+ setup, right? There might be an A+ setup that could help you take 1 trade, 5 micros. Let's go down here. 1 trade, 5 micros, and make 600 on it, right? In the current volatility. Not saying you're going to make 600. I'm just saying in this current volatility, it's doable to make 600 on 5 micros because there's a lot of volatility. I think on the 5-minute ATR, it was like there was like 70 points or something like that on the ATR. It's crazy. But anyways, you know, tapping yourself out here on 2 trades, you're going to miss this A+ setup that you had in the afternoon because you were so limited on taking 2 trades. And, you know, them being so close to your one loss being 50% of your daily loss limit. Think about that for a second. One loss is 50% of your daily loss. Does that make a whole lot of sense, chat? It doesn't. One loss should not be 50% of your daily loss limit. That's where a lot of people start blowing accounts. That's where a lot of people get into the poor mindset of tilting and over trading because they get in the hole in one single trade and it just already is blowing them out of the water, right? Because again, one more trade and like that and it's done. Like you've hit your daily loss, you've blown the account, whatever it may be, right? So you have to be very, very careful. Again, approach each day with giving yourself with the mindset of giving yourself multiple opportunities to trade, right? Don't just be like, 2 trades is going to tap my daily loss limit and I'm out, bro. Like one loss, 50% daily loss limit, $600. Like that's not going to work well for anybody. It's going to put so much pressure on you as a trader that you're not going to perform well. So be sure to give yourself multiple opportunities. You're going to see a risk management strategy that has helped me go from blowing accounts to keeping accounts alive for a lot longer. This is a strategy that not very many people use. A lot of people tend to use market structure, but this tool that I'm going to show you guys is something that I look at to measure how much volatility there is in certain time frames and certain candles to figure out how far I want to place my stop or how wide I want to place my stop, and also how I want to position myself in the trade, whether I'm position sizing full size or if I'm sizing down. So I'm going to go over that. Okay. So now jumping in, what we're going to do is we're going to go up into indicators here and we're going to just type ATR. All right, this is the average 2-year range. This measures volatility. This shows you how big candles are or what the average size of candles are on certain time frames. I'm on the 1 minute right now. So you can see on my screen here, this is the ATR. This shows that the 1 minute candles are about 8.5 or about 9-point candles on the 1 minute right now. If I go to the 5 minute, they're averaging, let's see, about 22 points on the 5 minute. If we go to the 30 minute, these are averaging, let's see, about 56 points. So about 56 points on average on 30-minute candles. That's showing how much candles are moving on the 30-minute time frame. Now, I usually trade off 5 minute and 1 minute. For this purpose, I'm going to just go off the 5 minute here, which is going to be a lot less than 30 minute, but the 5 minute ATR is 22. Okay. So I know that on average, if the higher the ATR, probably the less I'm going to position myself. So for me personally, an ATR in a 5 minute, anything over like 35, 40, I'm going to be sizing way down, right? Because what you see here, let's just take market structure, right? Let's just say I took a long right here. Okay. Let's say I took a long and this was my stop, right? Well, because we have such a lower ATR, this is not going to be such a huge move. But if we had a higher ATR, what looks like a smaller move will actually be probably a 50 to 60 point move, right? And so that's why you want to look at ATR and get an idea on what the average size of each candle is on the time frame that you trade, because volatility is going to be different, right? So like as an example, let's just say you have, some consolidation here, right? And then let's just redraw that, right? We're going to redraw that. So same consolidation, right? That's close, right, chat? So we had the same consolidation, right? So let's just say I took a long here. Okay. So we're long, right? And then same thing, right? We're going to take a long here. Okay. My stop is going to be right here below the consolidation. Okay. So that's my stop, right? That's my stop. Now this move for my stop on a lower ATR might only be 20 points, right? But in the same structure on a higher ATR, right, this might actually be 60 points. Okay. So you see why you have to be very careful when not only just going off structure, but being able to measure and see how much volatility is in the market, because it is going to matter a lot. Because if you go full size here on, 1 mini, right? Let's just say you're in 1 mini, that's going to be a $1,200 loss. Okay. Right. Whereas here, you're about 20, let's say 20 points. Let's just say 1 minute again. So that's going to be what, 400? Yeah. So that's going to be a 400. Actually, that's really horrible. This is going to be a 400. It's supposed to be a 4. There we go. A $400 loss. Okay. So you see, like, ATR, averages, volatility, it all matters. It can be very, very deceptive, right? You can think you see market structure and be like, you know what, this isn't a very big stop. But when you don't understand volatility and the ATR, you might get screwed because you didn't realize that what looked like a 20-point move is actually a 60 to 80-point move. And you don't want to get caught in that. That's no bueno, chat. That is no bueno. So that's why I use ATR to make sure that I'm not overstepping, right? I'm not overstepping. So as an example, let's just say here, all right? Let's just, let's say in this example here, right? In the 60 point, my full size. So while I want my stop loss to be market structure, okay? I want my stop loss to be market structure. So since we do have a higher ATR, instead of taking 1 mini, I might only take 3 micros, right? I might only take 3 micros on this trade, because if I go full size, that's going to be a $1,200 loss. But if I go with 3 micros, that's going to be just a fraction of what that full size loss would be, right? But here on a 20 ATR or on a lower ATR with the 20-point stop loss here, I could go full size because that's more along my risk parameters, right? I'm risking what I want to risk, right? On the same exact move, but a lower ATR. Hopefully that's making sense to you guys. Volatility matters, right? When you go look at different candles and different time frames and you have an ATR, the higher the ATR, the bigger the candles are, okay? The bigger the candles are averaging, right? It measures the average of what price fluctuation you're getting on those particular candles, right? Let's go to the 1 hour. Let's take a look at the 1 hour here. Look at my lines here. Okay, so we're looking at the 1 hour. Let's see, let's go up here. So the ATR on the 1 hour is 67 points, right? See how it fluctuates every time you go through different times, right? This is really actually disgusting, PA. If you look at it, those are horrible 1 hour candles. Look at all those wicks. So the average ATR on the 1 hour is 67 points. You look at the 30 minute, it's 56. Go down to the 15 minute, it's 41. You look at the 5 minute, 22, right? So on and so forth. You get the idea. So the longer time frame that you go up, obviously the higher the ATR is going to be because they are much larger candles on a bigger time frame. But use this to your advantage, right? Get an idea of what volatility is in the market. Is there a lot of volatility? Is it too much for you to trade full size, right? Because again, what might look like a 20-point move in a market structure may actually be a 60-point or 70-point move with a high ATR, right? What you're used to on a low ATR structure may not be the same when you have a higher ATR. So you definitely want to take a look at ATR and make sure you are up to speed on what type of volatility it is you're trading in, because you might want to size down while keeping the same stop losses. Again, I keep all the same stop losses. It's all market structure for me. But what matters is my position sizing. Higher ATR, lower position sizing. Lower ATR, I feel better about going full size. So with that said, I hope you guys found this helpful. Again, we're gonna keep this short and sweet and to the point, because I think this is super, super important as far as risk management goes, because our job as traders is to manage risk. It is to understand what the market context is and what the market is giving us in order to position ourselves appropriately for the type of volatility and structure that we have going on in the market. A lot of people are using Tradezella now to trade futures as their platform of choice. So in this video, I'm gonna break down a full tutorial on how I use Tradezella, give you all the simple things you need to use and need to know right now. That way it helps you trade futures effectively in 2026. We're starting off with a blank screen. We don't have anything on our charts, nothing. If we're gonna add charts and we wanna add instruments to our view here, we're gonna go up to this plus sign, okay? And then we're gonna look for what's called charts, which we find right here, okay? So we're gonna take this, we're gonna click and hold and drag it over, right? We're gonna drag this over, and it's gonna give me a search box up here to choose what instrument I want to throw on. So I'm gonna throw on the ES here. We're gonna choose ES, use default settings, okay? This is what it's gonna look like at first. It's gonna give you this box here. I usually just close out of this, but it's gonna give you charts that look like this, okay? Now, these are not candlesticks. These are what's called bars. For me, I like to use candlesticks. So I'm gonna go to this button right here, and I'm gonna choose candlesticks. And you can choose other things like Heikin-Nashi, Renkos, TPOs. I like to use candlesticks. I'm just used to them. So I'm going to change that to candlesticks, and immediately you see the difference here. Okay. Now, as far as chart cleanup, I don't like the grid in the background. Some people do, some people don't. I personally don't like it. So I'm going to go over to chart settings right here, right? This is kind of like your toolbar, right? I'm going to go to chart settings, and you see grid. I'm just going to click on, you see it's selected, it's blue. I'm just going to click on it, right? And it's going to get rid of my grid, right? Giving me a nice, clean background. That's honestly, I like clean. I like simple. I don't like a lot of clutter, right? And so now for me, I don't use this blue line here. That is the SMA. I don't use SMA. So I'm going to go over here to this cogwheel. It says configure chart elements, and I'm going to get rid of SMA. Hit that trash can there. Perfect. I don't use it. If you do use it, that's fine. I'm going to show you how you can add it back. Now, we have a clean chart, kind of starting fresh here. This is generally what I like to use. Okay. Now, if I want to add another chart, say I want to have another view, another panel that shows a chart, what I'm going to do is go back to the plus sign here. Okay. And then I'm going to click on chart, and I'm going to drag it over, and you can see that I can add it anywhere I drag this to. If I want to add it over here on the left side, I can. If I want to add it to the top, I can. If I want to go to the bottom, I can. If I want to go to the right side, I can. I'm going to add it to the right side here. Okay. So now it's going to split screen this, and I can go to the search bar, and I can add the NASDAQ. Okay. So again, it's going to give me the default chart here, right? I'm going to just remove the grid. Okay. Now you can use previous settings that you have preset, right? You don't have to do this every time. But I'm going to remove that. I'm going to go here, change this to candlestick, right? And then just get rid of that SMA there. Perfect. All right. So now we have two charts. If you want to add third, you can. If you want to add a DOM, right? There's a super DOM. You can add that. You can add it to, over here. You can add it to, left side, whatever you want to do, right? I don't use this in Tradezella, but if you do want to use it, you have it right here and you can add it, right? For me, this is too much clutter. I don't like any of this. Right? I don't like having all this on my screens. So I'm going to walk through how I use it, right? So I usually have other charts pulled up on monitors, but I like having just one chart that I like to trade off of. That way I can just see everything. And now I'm going to go add an indicator here. We're going to go under volume based, and we're going to add VWAP, right? So again, go into indicators here. This that button right here. You see indicators, and it's going to give you a list of different types of indicators that you can use. Okay. VWAP is volume based. So we'll go under volume, right? And then we'll choose VWAP. It'll give you settings. Mine are usually default, right? And I'll set it there, and there's my VWAP. Okay. There's my VWAP right there. Now, this is generally how I have my chart set up, okay? Because I use TradingView for other things. But if you want to add other stuff, that's how you do it. Now, if I want to see my performance and how I'm trading, there's a column here, right? If you go back to the plus sign up here in the top left, right, and where it says trade performance, you can add this, right? And it'll give you your trade performance and how you traded today. Right? How many trades you took, what your total gross P&L, what your total P&L, what your profit trades were, your losing trades, give you stats on your winning trades, break-even trades, losing trades, all this stuff, right? This is how you can keep up with your stats. I usually have this on and keep it just dragged down, right here, and just keep it down there, right? And I just kind of see what I did. If I want to look in more detail, I can just drag it up. But I usually keep it on about right there, right? That way I see, oh wait, you guys can't see that because of my camera. Hold on. Let me move my camera. Okay. You guys can see it. I usually keep it down there at the bottom. Okay. That's my performance center. That shows me how I'm doing on the day. I just kind of keep it down here, right? Out of sight a little bit to where it's not hovering or covering the majority of my screen, but I can see, a little bit of it and how I'm doing overall. So let me move my camera back. Move my camera back down to here. Okay, perfect. All right. Now that's my performance center. Now here, let's get into actually taking trades here. So with Tradevate, you can click anywhere in the chart. If I want to click down here, right, I can do a limit order down here, or I can click up here, do a limit order up here, or I can just do a market order by clicking this buy button or sell button, right? If I want to buy market, I just click buy, bang. It enters me in the position. Now there's multiple things you can do here with this. You see the one here, how it shows me I'm in one. Up here, it shows my open P&L. All right, my open P&L. If I want to, let's go to chart settings and go to fills and orders. We can change how we see this. We can say show fills, right? Now it shows my arrow, that arrow right there where I got long at. Okay. So now let's go back to, let's see. Go to fills and orders, show order lines. Okay, we can show order line. It'll give it like kind of a line of where your trades, or if you got long and got out of a trade, which I'll show you guys here in a minute. Let's see. Go back to fills and orders. There should be one on here where it shows P&L. Show P&L and price line. There it is. Okay, so show P&L and price line. All right, it shows my P&L on the price line there, where my trade's currently at and sitting. Right now we're $200 in profit, not bad. All right, going back. Now let's say I want to get out of this trade, right? We're up money, right? Let's say I want to get out of this trade. I can go up here and click exit at market cancel all, or I can set a limit order, right? If I want to click anywhere up here, I can say, all right, I'm going to click up here and I want to sell one. This is going to place a limit order up here. All right, see how it has one contract sitting up here? If price navigates that level and tags me there, it's going to get out of this position for me. Okay. So I'm going to drag this down to see if this gets filled here. So I'll drag it down close to price right there. If this gets tagged, it will fill the order and get me out of the position. Let's go to like a 1 minute here. Just kind of drag this down. Actually, price is pulling back now. So let's just drag this down. All right. There, we got filled. All right. Price tagged my limit order and took me out. Okay. Let's go back to larger time frame, 5 minute here, and let's just place let's just do buy another one at market, right? So we bought another one at market, right? No limit order. We just click buy. We bought at the price the market's currently sitting at, right? Whatever the market is currently sitting at, that's gonna buy market is gonna place us at that entry. Okay. Sometimes you get a little slippage, sometimes you don't. It kind of just depends on what you're trading or what size you're trading. Now, if I want to get out of this just manually, no limit order, just at market, at the market price, I can click sell market. Boom. And it'll get me out of the position. Okay. So there you see those arrows. These are all my orders and fills. Okay. So let's go to here and go to fills and orders, show trade lines. There we go. If we want to show the trade lines, it'll show where I got in and got out. And if I hover over it, it'll show me what I made or lost. Okay. I personally keep all of these off. Like I don't do trade lines. I'll maybe keep show fills on. Or like definitely keep show orders on, because if we turn this off, watch what happens. All right. If I turn off show orders and I place a limit order, see how it's not there, and you won't ever know it's there, right? I always keep that on, because there was a time where I didn't know I had a limit order set because that was off, and I had a limit order set and I got screwed, right? So always keep show orders on. That way you know if you have any limit orders out there set up, okay? Now, if I'm done trading, I will always click exit market cancel. This great button. This cancels absolutely everything. Cancels working orders, positions. It will get me out of absolutely everything. So when I'm done trading for the day, I'm triple, quadruple, clicking this 100 times to make sure I'm out of everything. That way I don't get screwed over. Okay. So always do that. Now, here's where this is what a lot of people want. All right. I've seen a lot of people talk about this, these ATM orders. Okay. We're going to turn this on and I'm going to show you what this does. Okay. Let's do that. Let's go to settings here. All right. We're going to change this to TP and stop loss. Okay. So we're going to name that TP and stop loss. I mean, we're going to have a TP set, stop loss set. We're going to show this in value. Okay. I want my take profit to be 800. Actually, no, let's do something smaller. Let's do 250. And then my stop loss to be 150. Okay. Stop loss type is stop, right? And you can choose different ones here. You can make it trail if you want to. You can make it go to auto break even, auto trail. You can do all types of different things. But we're going to set it just a stop for now, just for simplicity. All right. Now watch what happens when I get into a position here. Buy. See how it sets those orders there, right? It automatically sets my orders. And now that is set to my take profit that I want and my stop loss. Okay. Now, when one of these gets tagged, it's going to cancel everything out there. It's going to get me out of the position. It's going to cancel all my other orders. It's going to get out of everything for me. So you see there, boom, it just tagged my stop loss and you saw it got rid of everything. Okay. Everything got canceled out. I took the loss. My stop loss got hit. Now my limit order for my TP is also taken off, right? A lot of people like that feature because you don't have to manually do it. Now, if you do this, get back in, go along, now you can drag these, right? So this is how you do this. You go over to the right side here. You see how it changes, right? See how it changes? You can drag these up and down to where you want them to be, right? If I want my stop loss to be a little bit tighter, I could go there. If I want a wider take profit, we can go up there. Kind of depends on what you want, right? Depends on what you want. But you can drag these around, and again, whenever they get tagged, that is going to exit the entire thing. And there you go. My stop loss just got tagged right here, right? I'm in replay mode showing you guys this. So that's why my candles look weird and there's gaps, but that's how you do those. I'm just going to turn this off for now and talk about some limit orders for a second. So if I want to set a limit buy, I'm going to click anywhere in the chart down here. So I'm going to go here. We're going to click buy one. You see it sets this limit order. I can drag this anywhere I want, right? Drag anywhere. If I want to go ahead and just fill it, I'll drag it up to price, right? And then just let it get filled. And then if I want to set a TP, right, I'll just set the TP up here, which just did not get filled. There we go. Now we're filled. All right, now my TP is set up to here. Okay, and I can drag this. I can set a manual stop loss, a limit order by clicking anywhere down here. Do sell. You see my stop loss now is set here, set that. Now the only downside of this is when one of these gets tagged, the other is not going to get canceled because these were set manually. So you have to keep that in mind. Because these are set manually, if my TP goes up here and gets tagged, my stop loss is still going to be there. So I have to manually close that, okay? And by doing that, I can click this little X, right here, or I can just click exit, cancel all, and boom, it gets rid of all of my orders from my position sizes or my position that I'm in to the limit orders that I have set, okay? This is how I use Tradezella. Again, it's a very simple platform. It's nothing really overly complicated. You have all the different time frames that you want to choose from. You can go to the 15-minute, you change that all right here, right? You want to go to the day, okay? You can change all of that right there. Chart settings, you have all the chart settings that you want to choose from. Fills and orders, what you want to see on your charts. If you don't want to see the fills, you can go to fills and order and click this. It says show fills, how it has that check mark there. Just click that, takes it off, bang, bang. You don't have to see it. But always keep on show orders. That's super important. Always keep that on because that's, you trust me. If you don't have that on, you have a limit order out there set, it's all bad. Trust me, it's all bad. Zoom in and out, obviously self-explanatory. Zoom out right here if you want, or you can zoom in with the plus button, kind of what you want to do. Indicators, again, they have different categories, and there's some indicators that you have to actually activate inside Tradezella, which I think VWAP is one of them. So you have to make sure you activate that in Tradezella, but they have tons of different things in here that you can use. Again, I use TradingView for this sort of thing, but if you want to use it inside Tradezalla, you absolutely can. But you can build out the chart however you want to build it out. Okay, however you want to build it, you can do it. All right, go up to this plus sign. You want to add, let's see, positions. Right, this will show you your positions on what you currently have. If I get in a buy, watch. Okay, I'm in a buy order. Shows my position right here. Shows my position, what I'm currently up, what I'm currently down. If I want to get out of it, hit exit, cancel, exit at market and cancel. Bang, bang. Or if I want to add, let's say, my accounts. If I have multiple accounts, I can add accounts and show what accounts I have right here and what I'm up or down. Right. But the most popular is, I would say, adding multiple charts and then adding the trade performance. Trade performance can show you exactly where you're at on the day. I always have that up just to make sure that I'm following my risk management and what I want to be doing. So that's overall like kind of like the base level of Tradezella. It's very easy to use. A lot of people think this platform is hard. It's not. It's a very easy to use platform. Like I said, just may take a little bit of time for you to get used to, but hopefully you guys found this tutorial helpful. This is how I set up my chart. This is how I use it. Again, you are a different trader than I am, so use Tradezella and how you want to use it and what best suits you and benefits you. But this is a surface level video on how to set up and use Tradezalla. Hope you guys like this kind of content. If you did, smash that like button down below, subscribe to the channel, get more daily content, and I will see you in the next video. Cheers. If you're wondering what day trading strategy you want to use in 2026, or maybe you're looking to add another one to your arsenal, I'm going to give you one that has been extremely successful for me and my community. A lot of people in my community use this strategy. It is very powerful. We're going to deep dive into it in this video. All right, we are going to cover a strategy here that is around the initial balance. This is a strategy that I've been using for quite some time now, a couple years at that. And I've been teaching it and showing my community, and they've been all using it, back testing it. And we've seen a lot of success around this strategy. So if you're going into 2026, looking for something new to try out, to back test, I highly encourage you guys to try this strategy. This has been very, very profitable for me and my community, but it is failed auctions. Now, when we talk about initial balance, all right, first off, it is the first hour of the trading session, right? It's the first hour high, first hour low of the trading session. That is the initial balance. This concept has been around for a very, very long time. If you want to read more about it, it's actually in a book called Mind Over Markets. You can read that book. It's a book you study, not really read, but you could study initial balance in that book and see what all it's about. But there are different ways to trade this strategy and this setup. We're going to cover that right now. Right now, the biggest, I would say, the most profitable strategy that I've had around initial balance is what's called failed auctions. Right now, the technical way a failed auction takes place is when you have the first hour. Right, this is the high of the first hour. Right, you see this dotted line, this blue dotted line. That is the first hour high, and this dotted line down here is the first hour low. Right now, what happens on this is when you get a failed auction, generally you have a breakout above or below this level. So in this case, we had a breakout above the initial balance high, but we had weakness come back in and bring us back within the initial balance range. Okay. Now, a true failed auction, the technical term failed auction, means that on a 30-minute time frame, you had a candle, the 30-minute candle, come back within after breaking out. You had a candle come back within the initial balance and close within that range on a 30-minute time frame. Now, that doesn't mean that has to happen like right after initial balance is set. It could happen. Initial balance could be set at it's 9:30 Central Time or 10:30 Eastern Time, right? But the failed auction may not happen until power hour, 1 o'clock p.m. or 1 o'clock or noon or 2 or whatever, right? So it doesn't have to happen first thing, right? It could happen later on the day. All you're looking for is a 30-minute candle closing back within the range. That's it, right? That is a technical failed auction. The downside to waiting for a 30-minute closure or a 30-minute candle closure is a lot of times you're going to miss the move. Okay. That's the downside. Now, if you get a 30-minute candle closure that's right, but the closes are just barely back in their range, that might be an A+++ setup, right? And we'll cover that in a minute. But a lot of times you miss the move. And so what I like to do is I like to wait for these breakouts, but then I go down to lower time frames and try to find where areas of weakness are starting to take place that look like is going to bring us back within the range. Okay. So now that we've got that out of the way, let's look at this example here. And I'm going to show you real trade examples too, by the way. We're not just going to cherry pick. Like I have in Tradezella, in my personal live account, I have real trades that I'm going to show you that I took, right? To give you an idea of what I look for. Okay. But let's just cover our bases here, then we'll jump into Tradezella. Now, in this example, okay, we have the initial balance, right? You see the range here. Here's the high, that dot, that blue line, here's the low, and that blue line there. Now we're on a 15-minute time frame, okay? We had a break above initial balance high here, okay? So just zooming back out, we had a break above initial balance high, all right? We broke out, saw some consolidation. When we saw this triple top, now there are other cues you can look for in this. We're just going to cover the basics. But when we saw a triple top here and we saw weakness come down and break us back within the IB very aggressively, that would have been a great short. Okay. And I mean that in a sense of like, okay, I know that we are selling quickly. Am I going to get an entry or do I need to take an aggressive entry? Sometimes we have to take aggressive entries, right? And that just means sizing down. That way you don't have to have a wide stop loss on a huge position size, okay? So seeing this weakness here, a lot of times when I do take failed auction failures, meaning we broke above the initial balance high or broke below the initial balance low, in this case it's the high, and saw us come back within the range, that is a clue that we are going to fail that auction. The marketplace is an auction. The markets, NASDAQ, ES, it's all an auction place, okay? And so when we see those sellers come back within, we're gonna look for shorts. And my target generally, now whether I took the trade here, right? Because again, this is aggressive selling, or whether I anticipated it beforehand, right? My target is going to be about 50% of the initial balance range, okay? Generally, I'll be all in, all out at that point. However, if I feel very confident and I'm in a larger position size with more contracts, I might trim at 50%. and just see if I can get the full retracement of the IB range. Okay. So this is a failed auction on the IB high, right? We see the weakness, right? On a lower time frame, we see the weakness here. We're not waiting for the 30-minute closure. Again, this X you see here, this is the 30-minute closure. Okay. See what I mean by if you wait for a 30-minute closure, you'll miss the move. This already happened before we got the true failed auction. Okay. We want to try to anticipate before the failed auction happens. We look for clues, right? Our job as traders is to speculate and look for clues in the market that present us high probability setups. Okay. And this is one of them, right? This was one of them, a high probability setup that we are likely to retrace back within the IB range. We actually had it twice today. During this day, actually. Oh, 3 times actually. We had 3 failures. Look at this. So we had a failure here, right? Where we came back within, we rode all the way back up, saw weakness at the same exact level. Okay. Came back within. Look at this. This would have been another great setup here where we saw a higher low, or sorry, excuse me, a lower high get put on this. When we saw this rejection here, saw a lower high get put and fail it. Cause if buyers were present, why wouldn't buyers just run that? You know what I mean? Why wouldn't they just run it? Okay. If buyers were present and we were going to continue ripping, why wouldn't buyers run this on this higher low, especially after failing this one? You know what I mean? So seeing that, knowing that we are in an auction place, are telling us what we need to know here. Okay. Sellers are coming through. Look at where we go all the way back down, almost back to 100% retracement. Okay. Looking at it here, look at what happens. Again, we break IB high. All right. We see weakness. What happens? All the way back down. Okay. So these are all failures of IB high. Let's just go back to another one. Let's just look back here. All right. Here. Oh, here's a double break. So here's a really good example, right? This is a double break on the IB, which by the way, is very rare. It is statistically, I want to say like 16 and 20% of the time you'll get a double break. You have to check me on that, but it's somewhere around those numbers. Okay. You'll get double breaks, which are very, very rare. In this case, we have our first break of IB. You see the IB low here, IB high here. Our first break of IB was on the IB low. You can see we barely broke there. Look at what happens. We break IB low, consolidate, and we retrace all the way back above 50% of the IB. Okay, we retrace and come back up to IB high. This is where we got the double break. We broke IB high, came all the way back down. All right. Now, what type of market is this good for? Okay. What type of market do you get really good trades on IB? Generally, it's range days, right? Now this is for failures, right? If you're trading failures on the IB, we're going to talk about another trade here in a minute, but if you're trading initial balance failures, you get really good trade setups in ranging markets because they're not trending, right? They'll trade at certain levels and be unable to continue and then fail it, right? So you get really good failures in ranging markets. Okay. Now, I want to emphasize entries here because I know a lot of you guys are going to comment down below and ask, well, how would you enter? Like, what's your position sizing? This and that. It depends on the context of the market. How I enter, and also too, how I enter and size may not work best for you. But for me, I will tell you that is very much around context. Okay. So if we see that we broke below initial balance low here and we're consolidating, I probably wouldn't have entered this long until I saw the strength, right? Because I'm not entirely sold on this. Okay. There's a lot of consolidation here. I want to see true strength, real power in us coming back within the range. You see how powerful this is, right? And then you see how powerful this gets. I want to see real power, right? Because then that gives me the indication that, okay, we are fixing to go back within the range and hold it. Okay. So I probably wouldn't have entered here, which means my stop loss would have been below IB low here. And that's a wide stop loss. Okay. So I might position myself small in case this does retrace, but find ways to add on the way up to capitalize off the movement. Okay. Same thing here, right? Same thing here. When I see this real strength, us really powering back down below IB high here, my entry may have been somewhere down in here, right? With a stop up here. So I have to position size properly right here. That way I can have not risk too much P&L on this stop loss, but then add on the way down. Okay. So when it comes to like entries and exits, I love 50% retracements of the IB back around the 50% mark. Okay. But as far as entries, there isn't really a secret sauce to entries because the market is always different. Okay. But what stays consistent and constant. And what I look for in entries is that real power of it coming back within, the real aggressiveness. Okay. If it's choppy, if it breaks below and it's just choppy, I'm staying out of it. But if I get that real raw strength of the market that's confirming, hey, we're going to stay within this range, that's when I'm going to pounce and take the entry. Okay. Now, there's another way to trade this, okay? And it is continuations, right? A lot of people trade this. Me personally, I don't really trade IB this way, but it is another powerful method of trading initial balance. And that is looking for continuations, right? Where the auction place is trending and we're taking price in a certain direction. A lot of times when you get breaks above or below IB levels, in this case, we broke below IB low here, okay? We broke below IB low, showing a lot of strength. I mean, a lot of strength. A lot of people will wait for retest. Let me just zoom in here. A lot of people will wait for retest of these levels. Okay, so we'll see a powerful move down. Okay, look for some sort of a retest. Here we didn't exactly get a retest, but that could have been, you know, a way to take a short here is when you see this and then that complete failure of us retesting it. That could have been a good short. But we get this powerful move, wait for a retest of that level, reject it, and then start to come back down. Okay. In this case, we didn't quite get a retest. We tried to go up and retest it, but seeing this failure here would have been a true sign of, hey, we are still going to trend downwards. And you could have taken that short with a stop somewhere up above IB low here, right? Again, entry, you see the strength, you act, right? Exit or stop loss, position sizing, it's all about context, right? It's all about context of the market and how aggressive it's moving, and also what you can tolerate with your entries and exits, right? And position sizing. So you have to really take that into account when you are entering these, because sometimes these can be aggressive entries, right? And you have to position yourself in a way that you can tolerate pullbacks, okay? Especially if you're doing the continuations, right? But then vice versa on the initial balance high, right? If we do get a move, say up to initial balance high, and we break it, right? And we break it there, a lot of people will wait for continuations, right? Or retest to then take the continuation, right? The beauty about trading IB is that we can always, when we get breakouts, we always wait to see what the market wants to do next, right? If we break above IB high, we wait to see if we retest it and then we fail it, or we break above and we wait to retest it to see if we get continuation, right? Either way, you're waiting to see what the market and the auction place is telling you to act. You're getting information from a literal auction place to tell you what to do, right? The market's going to tell you. Now from there, it's on you on how you enter, position sizing, and how you manage the trade. It's all about trade management. That's where the real success is in trading this strategy. Okay, now let's go to my Tradezella here, and we're going to look at a trade that I took. Okay, so I took this trade in this is live personal funds, by the way. This is my Tradezella account linked to my live account. So we took a long position right here, okay, and wrote it up here. It looks like initial balance low was right after market open. Okay, so we have this low here at 832-ish, right? Yeah, about 832. And that low is sitting at 772. So because, and I can't pull up IB indicator in here because I don't have it in Tradezella, but this was IB low. Okay, so let's just go over here. Look at what happens. We break IB low. See that? This is IB low. We break IB low, right? And we get that strength. We get that consolidation, right? And then we start to see, looks like I did front run this a little bit. So, okay, I see what I did here. So we got the strength, right? So this was the strength that I'm talking about. Look at the buyers engulfing this selling here. And then we came back down, formed a higher low, or excuse me, a higher low and consolidated. That's where I took my entry. We saw the strength and I exited off that just in case we decided to pull back. So again, it's all about how you manage a trade. You don't have to, trade it any specific way. It's all about how you want to. In this particular scenario, I saw the strength, waited for a pullback, got the pullback, got a little consolidation, took the entry and wrote it up and got out, right? So that was that trade. Again, live funds, real account, all executed. You see, I made $220 on this. Going back to the other trades here, let's just look at some more trades here. Let's go to this first one. So this is another IB trade, all right? We took a short. All right, so let's just zoom in here. Let's just find Let's find the initial balance high. So this right here is IB high, right? This is IB high, okay? We took shorts here because look at what happens. Remember when I told you I wait for strength? When we saw this strength coming down back within IB, that was enough for me to take shorts. So I took shorts right here, just below IB high. Took a little bit of drawdown. Stop loss was up here, right? We did almost get tapped, but look what happens. You know, sometimes entries aren't ever going to be perfect, and you don't ever need to have that expectation. But look what happened, right? We came right back down, and I started covering down in this range right here, making, you know, I think it was $125 on this short, right? So real trade, real account, executing IB. This strategy works. It is very powerful. The one thing you need to take into account is, again, how I trade it isn't always going to work best for you, but you have to find ways to take a strategy like this and mold it to your trading personality, your position sizing, you know, how wide your stop losses are. Are you a scale in, scale out, or are you all in, all out, right? How you manage your trades very much matters, okay? And then taking the context of the market and what the market is telling you, the auction place is telling you, would then give you an idea on how you want to manage a trade in this situation, okay? But IB, very, very powerful. Encourage you to check it out. I've been using this for 2 years. This strategy has been around for decades, right? I mean, this strategy has been around for ages. And for a strategy to be around that long tells you that it works. 2026 could be your breakout year in trading. And I'm going to give you a strategy that really helped me make some pretty good money this year in trading. When one of my other strategies wasn't working, I developed a new one. It's not really a new concept. It's an older concept. A lot of people use this. I just molded it to fit the way I trade. But I'm going to break it down in this video for another strategy that you can add to your list in 2026. All right, so I'm going to share my screen here. We're going to walk through what this strategy is. This strategy, this is something that I kind of started developing based off older concepts when my other main strategy wasn't really working as well. I needed to find something that I could build and create that fit my trading style, right? And something that I really noticed, and if you trade the NASDAQ, you probably know this as well, the NASDAQ is notorious for running key levels, if you look on higher time frames, like 15 minutes, 30 minutes, and you find very strong areas of support and resistance, the NASDAQ it loves running those levels, sweeping them and then reversing out of them. Okay. Now my trading style is I am kind of a reversal trader. I trade better that way. For whatever reason, trading with trends, I'm not that great at. So I'm a reversal trader, and we're going to break down what this strategy is. And I'm also going to show you trades in my Tradezella account that reflect this strategy in a real live personal account. Okay. So we're going to dive into that right now. Now, again, what happens on the NASDAQ? Okay. So let's go. I'm actually on gold right now. Let's go to the NASDAQ. All right. Let's go to a higher time frame. Let's go to 15 minute. We'll go to a 15-minute time frame here. Okay, let's just see what we can find, right? What does the NASDAQ like to do? It likes to sweep key levels, okay? And so if we go here, let me just take this initial balance signal indicator off here, get this out of the way. What does the NASDAQ like to do? It likes to sweep levels, right? And then reverse out of them. We know that up here, we have strong levels. This is on a 15-minute time frame, by the way. We have strong levels up here, okay? Now, does it mean it has to sweep it now? No, it could take some time, right? But when we do start getting to these levels, look at what happens, right? We sweep it here, barely. We barely sweep it and we reverse out of it, okay? Look at here. Look at these lows here, right? What happens? Bang, reverse out of it. Bang, reverse out of it, okay? These are very easy to identify. All you have to do is go to a higher time frame. Go to a 15-minute, go to a 30-minute, and find levels like this, okay? We could probably let's zoom out here and see what else we can find. Okay, look at this, right? Another key level, low, getting swept and reversed out of. Let's just keep going back, right? Now, again, I'm not really trying to cherry pick here, but you guys get the idea, okay? Strong low, strong lows, sweeps, reverses, strong low, sweep, reverses, right? The NASDAQ is notorious for doing things like this, okay? So what we can do as traders is try to find those key areas that are likely to get ran for us to then place our entries, okay? Now, what do I mean by place our entries? Okay, so if I'm going back to Where was that? Where was that one level at? Let's see. If we're going back to here, okay, let's just say we're going back to here. And I know that we've been consolidating up here for quite some time. Something that I might look for is a sweep of this level. Okay, so the sweep of resistance. And again, I know I'm cherry picking, but guys, we're gonna hop in Tradezella and I'm gonna show you the trades. Okay, so just bear with me. Let's work through this for a second, and then we'll hop in the real trades to really, break this down for you guys. Something I'm gonna look for is, a resistance area like that, and look for that break. Okay, look for it to break it. My entry might be somewhere up in here. Okay, now I didn't take this trade. I'm just giving an example, right? So my entry for a short position, right, waiting for this to get run, my entry for a short position might be up in here as a limit order, but small size. Okay, I'm gonna be small size up here on my entry because it could fill me and then run more before it pulls back. But I am wanting to get in on this action because I have high conviction that we're gonna reject here, okay? So my entry might be pretty small up here. And if I get that fill and I get confirmation, I might look to add just on the way down, okay? As we continue to reject it. Now, vice versa on the low side, okay? I know that we have strong lows here. Look what happens. Sweep it, reverse, sweep it, reverse, okay? Now, my entry, may not be a perfect entry, which some of the trades that I show you guys on the strategy, they were like legit perfect entries, but my entry may have been somewhere like right here, right below this sweep. Okay, so I take a small position here, could have taken a little bit of heat, and then it reversed, right? And then it finally went in my favor, and I'm looking to add on the way up with maybe a stop loss at the next point of invalidation, okay? So what I mean by that is, where is the next low? Okay, it could be here, right? There's a higher time frame, could be right here. I'll stop just below there, but I have to make sure I position size myself in a way to tolerate that. Now, if I can't tolerate that, generally my stop loss will go by point value. If the next point of invalidation is too far for me to be like, you know what, I don't need to ride this all the way down there, then I'll go by point value, and that might be like 30 points, 40 points, okay? Depending on my position. Again, it's all around context, right? So again, what do we look for? All right, well, we're looking for, I'm just gonna draw this out. On the NASDAQ, we're looking for areas that we have strong, right? Strong resistance or strong support, right? The NASDAQ is notorious for doing this. Boom, right back down. Okay, so my entry for a short might be somewhere up in here. Or if NASDAQ does this and comes back up, my entry for a long might be somewhere down in here. Okay, see what I'm doing there? I'm waiting for the market to sweep those key levels. And again, this works well in ranging markets, not trending markets. Okay, if we're in a ranging market, this is what you want to look for. I'm waiting for the NASDAQ to sweep key levels, okay? Key levels. And then my entry is above or below whatever that level is. If it's a resistance level of a high, my short position is above that high, waiting for it to get filled, sweep it, get filled, ride it back down. If my position is a long, I'm waiting for a strong support area to get ran, fill my long, and ride it back up, okay? Now, this can be scary, right? Why is this scary? This strategy can be scary because you are very much going against the micro, I don't want to say trend, but the micro direction, right? On a micro time frame, okay? That means when the market is pulling back, you are going against that small grain, that small time frame grain, to then ride it into the opposite direction. That's scary for most people, okay? Most people aren't very comfortable with that. That comes down to one, screen time, and your risk management, how good you are at managing trades. Okay, this is very important. This is a little bit more of an, I would say, a advanced strategy, not something for a newer trader to do. So if you are a newer trader, I would encourage you to go watch my initial balance strategy. This strategy, I wouldn't say is good for a newer trader, because if you haven't really fully mastered emotions or mastered risk management or trade management, the mental side of trading, this strategy might feel a little bit brutal to you because you are going against the grain of the market, and you might get a little emotional if you catch some drawdown, which chances are you're going to. Okay, so just keep that in mind when you are practicing this strategy. Now let's go into Tradezella here, and let's go to let's see. Strategy. Let's go to, back out all the way here. I don't know why that just happened. Let's go to Tradezella. And then let's drag this. Let's go to strategies, limit order on stops. This is the strategy that I've been talking about. Okay. I have 7 trades in here logged that I can show you guys. Okay. So let's go into this one. This is MNQ. Okay. This was a trade that I took on MNQ. All right. What happens here? Okay. We see that we have a strong low right here. We took a long on this, by the way. We have a strong low. My entry was down into here. Okay. So it was down in here. I wanted this to get filled. Now, did I take some heat? Yes, I took some heat down. I think it was 241 down to 220. So about 20 points of heat. My long right here was just below this strong support, but we were in a ranging kind of area where we already ripped. We were ranging a little bit. We were already bullish on the day. All right. Because of this rip that we had previously, right? We're already bullish. We want to get in on direction of the market. Okay. And that's also something taking account too, right? You want to make sure that you are going with market direction in this. If the market's been bullish, then maybe look for levels of support that you could wait for it to break and then continue the actual overall big time frame trend, right? Trend is your friend. Go with it. This works in ranging markets. I do use this in ranging markets. However, if the market is bullish, look for those lows that get swept, take the long and ride it up, right? Does it work every time? No, but it does work. You know, it has worked for me a lot of the times and I have been profitable with this strategy. But you see where I took this long, right? Where you're bullish, broke support, got an entry below the support, took a little bit of heat, about 20 points, right? Position size appropriately, but then found the strength back up within. Okay. So again, taking the long, going against that grain, this is where it's scary because you see this steep pullback. This is where it gets scary for most people, those most newer traders, because you are going against the grain a little bit here. But as a reversal trader, this is stuff that I'm used to. Okay. So position size myself appropriately, take the long, ride this thing back up. Okay. This is in a real account, real trade. Now let's go back to the trades here. Let's just look at another one. All right. So we'll look at the loss here in a minute. Let's look at, let's look at this one here. Let's see. For some reason, it's not showing my trade. So I'm not even going to explain it because it's not showing my trade. So let's go to another one. All right, here we go. Here's another one. So look at this, right? Same exact concept. Okay. We took a long, we were bullish. Okay. Bullish on the day. Look at where we came down. You see this low here, right? I already made a video explaining this is why I have these drawings on here, but you see these lows here. Look at how it reacted. We swept that and immediately bounced out of it. Look at where my entry was. See this? This is my entry just below this low, right? For a long. Okay. Risky? Yes. Something I'm used to? Yes. Not for the newer trader. I'm going to keep saying that. This is not for the newer trader because you are going against the grain a little bit, right? Can get a little scary, but you have to learn how to manage it. So here, entry long just below previous lows. Okay. Right back up, getting out. See, my entry was at what, 3,773. This is actually on gold, by the way. Gold acts similar to NASDAQ where it likes to sweep key levels and reverse out of them. They move kind of, the concept between the two instruments are the same, right? So this was on gold. Entry at 3,773 all the way up to 3,775. So actually, that's about a three-point trade on gold, which is nice on gold. But you get the idea, right? We swept this strong low, higher time frame low. Entry just below it, wrote it up. Again, going with the trend. I'm not fighting this trend. There's ground rules there. We want to know the trend of the market. Okay. Going back, let's look at another trade here. Let's pull up this one here. So pulling up this one, let's take this to 5-minute time frame and zoom out a little bit. All right. So here we go. Look at this. Sweep, right? See this low? Sweep of the low. Now this, I didn't have my entry below this low here. I was a little, I remember this trade. I was a little skeptical on it. But when I saw the strength after sweeping it, I went ahead and entered and took advantage. This was on NASDAQ. We took this at 25,116, I believe is what it is, up to about 25,163. So very nice trade. This was on MNQ micros. We made about $433 on this trade. So again, same concept. We swept this low, found strength, took the long, and rode it up. Now, I think my skepticism on this was accurate because again, we did right. Even though we went up, we did end up selling back off and coming back down. But the concept is all the same. Waited for a low. I saw strength, took it, took the long, and rode it up here. So let's go to a different trade here. Okay, let's look at a loss. I think losses are important. You're going to have them. So let's look at this loss here. This was a $326 loss. Looking at where I took this, I took a long, it looks like right here. And then ended up getting stopped out. So on this trade, I remember this trade, we looked at this previous consolidation zone and we looked at these lows here. Okay. So these lows ended up getting swept. You can see that, right? They got swept, got a little consolidation, saw a little bit of strength. I was like, okay, so maybe these lows are going to hold. I end up taking the long. What I should have been looking at was this right here. All right. I looked at too much of a lower time frame low and I paid the price for it. Okay. So I took the long thinking we were going to sweep these lows here and ride up when really we had a much stronger low down here. And look what happens. We come down and sweep it. Right. And then what? Rip straight back up. Right. So my mistake was on this trade, was looking at too much of a lower time frame low. That honestly in hindsight looks pretty irrelevant right now. And didn't pay attention to a higher or a more strong low to take the long off of. And so again, that's the importance of that higher time frame, right? Zooming out, where do you have a strong area that NASDAQ is likely to sweep for you to then take the entry? So this was actually a loss that I took for $326 here. Okay. So something to pay attention to. Let's go back and look at another trade here. Let's look at 216, 411. Let's do this one here. We made $411 on this trade here. This was a long. All right. So again, same concept, right? Look at this. Look at these lows, right? Look at these lows. Look at how we swept it, right? Now, this wasn't a trade where I already had my limit order placed, okay? We saw the strength come out of these lows. Look at this strength, okay? Broke these lows, found that strength, took the long at 25,255, rode it up to 25,297. This is on MNQ, 5 contracts traded, made $411. Okay. So again, we swept this low, found strength, and I took the long. There are some cases where I will already have a limit order placed down below these levels to take the reversal. It kind of just depends on my conviction, right? Do I feel like, do I have strong conviction on the trade that we are going to, rip these key levels and then reverse out of them, right? It all depends on market context and my conviction in the trade, but it is something that I'm looking for. So overall, the moral of this strategy is, again, finding those areas, right? Finding those areas. Okay. See that? We have, oops, let me redraw that. Okay. See, we have these highs and we have these lows. Okay. I want to see price break them. I'll take my short, come back down. Okay. Or vice versa, where we break this, I take my long and we come back up. Okay. So it very much depends on market context. Is the market bullish? Great. If it's bullish, let's look for a key area of support for the market to go run, and we'll take a long position below those levels. Is the market bearish? Do we have a lot of selling coming through? Awesome. Let's look for areas of resistance like this, right? Look for areas of resistance, find ways to short it, back down. Okay. NASDAQ and gold both are notorious for running key levels. And that's what I'm looking for on this strategy. Let me know if you have any questions. Again, this is a more advanced strategy. It's not for a newer trader. So if you're a newer trader, please don't try this. Learn risk management, learn trade management, mental, emotional, all the stuff, right? Before you try this. This is a little bit more advanced, but if you do use this, let me know in the comments what you guys think, and I will see you guys in the next video. Cheers.